Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where we'll try to look for decent trading occasions. We'll try to look for some excellent trading setups in the last week before Christmas. So, unfortunately, volatility will decrease. We won't have much liquidity as well. Surprisingly, market calendar for this week seems pretty busy. It looks okay, but definitely, as always, every year, markets are less exciting a few days before Christmas. So let me show you the calendar first. Here we have calendar yesterday, today. Today we started with minutes from RBA meeting, which did not bring any significant changes. What we also had was IFO business climate and expectations from Germany, which came lower than expected. And apart from that, we will have a data from the housing market from US. Not exciting day, but tomorrow we will have more, for example, speech from Mark Carney, trade balance from New Zealand. We will have PPI from Germany as well. We will have crude data for the oil traders, and on Thursday, policy statement rate decision from Bank of Japan, press conference from Bank of Japan, GDP, American GDP, Canadian CPI, so important. Quite big events this week. Fundamentally, we're having a Santa Claus rally on stocks. It's explained with the tax reform. Probably, if not tax reform, we would have another explanation. But yes, we do have optimism on stocks. And not much is happening apart from that. Let me show you what's going on the markets from the technical point of view. So first, we will start with gold. Gold is in an uptrend. Was in an uptrend, but it all ended in December. Well, the top of the uptrend, yearly uptrend, was in September, but eventually the major sell signal and the most recent sell signal we got here on 5th of December, when the price broke the uptrend line here and the lower line of the triangle, of the symmetric triangle pattern, and a horizontal support 38.2 Fibonacci level. So we broke that. That was a breakout of 3 important supports at once. So no surprise that it triggered, increased the bearish momentum here. The price went significantly lower. We tested another Fibonacci level, 50%, and that's where the bounce happened. And now we do have a comeback, bullish comeback, which actually is a great occasion to sell. Right? Well, I'm always, my opinion on that is always you should wait for a price action to confirm that there is a bearish sentiment. So it would be better to wait for a shooting star or a bearish engulfing. But some of the trading strategies allow selling when the price touches the resistance without waiting for a confirmation. I think that this green area is a very nice place to go short. I didn't decide yet if I'm gonna wait or I'm gonna sell now, but I have to wait for the price action. And actually we should always adjust the support and resistances to the latest price movements. So let me here and here out go like that, because we do have a support here, support here, support here, breakout, resistance. So actually this place for a short position is here. If you obviously want to get the best risk to reward ratio possible. If you believe that this breakout from the 5th of December was a legitimate sell signal here, that should be just a confirmation of this negative sentiment, of this bearish sentiment, and from this point we should see a decline. Next one, Australian dollar to Canadian dollar. What we have here is prices making lower lows and lower highs, and finally we broke the trend line here. The price went significantly higher, 90 pips higher, and that actually triggers a long-term buy signal with a potential target on the green resistance. So here we had the support after the breakout, resistance. So all signals show us that we should see the price on the green resistance. Next one is New Zealand dollar to American dollar. You remember the situation, inverse head and shoulder pattern, quite technical one, quite nice. Especially that inverse head and shoulder pattern bounced from the horizontal support here, marked with yellow color. We bounced from it, also from the lower line of the symmetric. Well, it was in the same time, like you very often when you have head and shoulder pattern, you can create a pennant from it or symmetric triangle, depending from the time frame. So it was here like that. We bounced from this horizontal support, lower line of the symmetric triangle pattern. Eventually we broke the neckline, price went higher, and now after that we do have a rectangle, this green color. Rectangle, as we all know, is a trend continuation pattern, so we should see the price going higher. Especially that, well, yes, we did meet this uptrend line here. I will show you, right? On daily chart, we're going to weekly chart. We met this line, but to be honest with you, I think that we will go for this resistance here. This marked with orange color, it was a support here, 10th of October to this place. We do have 50 pips. 50 pips for New Zealand dollar to American dollar is quite a lot. So that's still a decent short term, maybe mid term. Short term for some of the traders is like 5 pips. So let's call it a mid-term trading occasion. Go long. Next one, dollar index. The volatility decreases. It's like a tight range for the last few days. We are closed, the price is closed below this horizontal resistance here and this horizontal support here. We do have a mid-term uptrend line here. With this defense from yesterday, it looks optimistic, it looks positive. Also today we do have a long tail in the candlestick, so it all looks good as far as long as we are above the orange area. Australian dollar to Japanese yen. Here we do have a buy signal because the price went above the yellow resistance. Buy signal will be even stronger once the price will break the upper green line. So we do have chances for much more than we have already. There's a positive sentiment here. Obviously, one dangerous situation, so a statement from Bank of Japan, which should be influential for this pair. But other than that, we shouldn't have any major problems here. I'm sorry that I thought, yeah, that's Australian dollar to Japanese yen. Now euro to Japanese yen. Still sideways trend. Unfortunately for the trend followers, as you can see, we are moving in a tight range between 131.75 and 134.35. So that's 250 pips range, sideways trend. Well, you can do both, like you can wait for the breakout or go with the bounces from it, like buy, sell. I prefer to go for the breakouts in these cases than bounces, but that's just one of the strategies. Next one is cable, which is continuing with this quite nice wedge formation. So we do have an uptrend, higher highs and higher lows, right? We defended uptrend line in the beginning of November. The price went higher. We broke the horizontal resistance here on 1.333. After the breakout, the price made wedge. Wedge is trend continuation pattern. This horizontal support was defended 3 times, 1, 2, 3. Here, actually, we can consider those as a false breakouts below the supports, or we can also like adjust this support to the latest price swings, like that. It does not change much because as long as we are in the wedge, there is a positive sentiment and we should see a further upswing here. American dollar to Singaporean dollar, that's, well, this pair is trading very, very technically. As you can see, the latest development here was the bounce from 134.95. That was also bounced from the lower line of the flag formation here. So a downtrend, lower lows, lower highs, a flag formation, breakout of the lower line of the flag, then a comeback. We use this lower line of the flag as a resistance, horizontal resistance as well. Here support, resistance, and that's quite a decent sell signal here, especially that we are still below the downtrend line. Next one, euro to British pound. Still in a sideways trend, still under the influence of the bounce from the horizontal support. You can see, well, this December trading is kind of annoying recently. Look at that. In December, no major swings. Horizontal resistance here, horizontal support here. We just wait for the breakout of the horizontal resistance. It looks like it's more likely to happen. So it looks like the bullish upswing here is more probable. Euro dollar had a flag, bullish flag, because it resulted with a bullish upswing. Actually, if we look at that a bit closer, upswing flag, upswing flag, upswing flag. So apparently one of the principles of the price action trading is that history likes to repeat itself, and in general, as a technical analysis, price likes to repeat itself, those patterns, movements. So if we had flag, upswing, and we have a flag, and we defended this horizontal support, and we are also having this head and shoulder pattern, inverse head and shoulder pattern, it means that price getting here can be a legitimate buy signal. And American dollar to Canadian dollar, still in a sideways trend, false breakout here, horizontal support, horizontal resistance, sideways trend, not much of an interesting situation here, but why I keep this chart open is just the fact that in the future it can result with a nice upswing. In the future we can have a nice upswing or a downswing. What I meant was with it can result with a nice trading decision, trading signal. That is why, as you can see, I keep all my sideways trends alive, all my charts with sideways trends alive, because you have to be patient in trading, right? So you wait 1 month, 2 months for a situation to develop, and finally, eventually the signal comes, and you just get the fruits from your patience. You just harvest the profits. Canadian dollar to Swiss franc. Not much of a trading occasion here. Let me just delete this line. I'm sorry, I wanted this one. It's still a flag. In theory, it should result with an upswing, but chances for that are now kind of limited. S&P 500, new all-time highs obviously, but we are getting closer to 2,700 points, which is absolutely crazy, but still don't ask me about the logic behind it, because I think there is none. And we will see how far the situation will go till we will have a reversal here. Obviously, it's too soon to think about reversal because we don't have any signs of potential reversal whatsoever. But I admire people who buy now, who buy stocks in the current price. Next one, DAX. DAX is okay. DAX is okay to buy because here we are lower than American indexes, but at the same time we do have a legitimate technical trading signal. So first, it all started with a bounce from 12,900 points. The latest bounce was in December. We made a reversal. Then there was a midterm downtrend line. We broke this midterm downtrend line, upswing, wedge, correction, pattern, then upswing. We broke the horizontal support on 13,200 points, 13,190 points, let's say. So that was bullish, that was bullish, that was bullish, and that is bullish. So now everything in the technical analysis is on our side. Like we see here, potential for a further upswing, at least here to the tops from October and from the beginning of November. So that's the current sentiment, that's the current outlook on DAX. Here I wanted to show you Euro to Swiss franc because here's an ultra interesting situation here. This pair was in the channel up formation, those black lines. Also in a wedge here. And that was a rising wedge though, so it wasn't a trend continuation pattern, but more a trend reversal pattern. And actually, it looks like it will be a trend reversal pattern because also look at the bounces here from the red line. Fast, 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 fast. V-shaped reversals. Here, no. Here the price just stayed low. There was a constant selling pressure. And the price didn't want to reverse. We had only breakout attempts, and finally it happened. It happened yesterday. We broke, even let's make it like that to adjust it to this low. We broke a long-term lower line of the channel up formation, a mid-term lower line of the wedge formation, and now the price is, and also we broke this horizontal support. And now the price is making a reversal to test the broken support as a closest resistance. And look, so far so good. So far it looks like this resistance got broken, which is pretty good selling opportunity. So, in my opinion, we can have a nice downswing here. There is another support here. Where is this low? 116.18. Yes. Low 16.02. Yeah, it's here. So it's exactly here. That will be a closest support now, so the potential target for this trading opportunity, and that's actually a good risk to reward ratio here. So sell 17, profit 27, maybe not the best one in the world, but I think that still we can go much lower than that. We can go much lower than the support. Next one is oil. Oil is in a sideways trend since the end of November. That's a pennant, symmetric triangle. It's the same, but also it can be considered a head and shoulder pattern. Left shoulder, head, and right shoulder. So there's also a neckline of this formation, which is recent upper line of the channel up formation. The volatility decreases over time. And then, well, we are exactly in the middle of the sideways trend, so that's actually the worst place to be. You don't want to trade here. If you're a trader who goes for the bounces or breakouts, it doesn't matter. Because if you go for bounces, you want to be here or here. If you want for the breakouts, you want to be here or here. Right? So we are as far as possible from the most important supports and resistances, which do not make this situation interesting for trend followers. But a breakout will be interesting, and I'm waiting for this breakout. Next one, FTSE. As we said here that it's still an ascending triangle, so the price should go higher. And the price is going higher. Most probably it will test the horizontal resistance, and maybe a New Year's gift or Christmas gift for the traders in London will be breakout and new highs, new long-term highs on FTSE. American dollar to Japanese yen, not so interesting here. Not much that I can tell you about the situation of this pair. I don't like this pair. I'm surprised that many traders like this pair. Well, if you have profits on something, yes, you should continue. I don't feel this pair. I don't find this situation interesting on American dollar to Japanese yen. As I told you, the statement from Reserve Bank of Australia did not cause any changes here on the Australian dollar to American dollar. Here there is the sideways trend, resistance, support. As long as we stay inside, not much is happening. There is a buy signal. The buy signal should get here. 80 pips. Why there is a buy signal? Because we are still under the influence of this false breakout here. A false breakout below the long-term uptrend line. As you can see here, this red line. False breakout from the flag formation. This one. And we are back above the midterm downtrend line here. So it's all good. American dollar to Swiss franc. There is a new support here, most recent. There is a new resistance here. This one is no longer in use. This one is no longer in use. This one. Actually no proper signal here on this pair. And Bitcoin, the volatility decreased. Once the contracts were introduced, the volatility just dropped on Bitcoin, which is super interesting. Here, trend line. Now other pairs are crazy. Some of them go like 800, 200% in 1 week. And that's absolutely crazy. Probably some of the money go from Bitcoin to other cryptos. That's what's probably happening. And yes, that's the situation on the market today. So many sideways trends, few trading signals. With those few trading signals, you should be fine. You don't need, well, to be honest with you, to make profits on this market, you just need one trading occasion. And we got that today, so it should be fine. Thank you very much for attending this webinar, daily analytical report. And for more trading occasions, visit our Twitter account or our website, alpari.news. Thanks very much.